Hey everybody, happy Monday. Welcome to, you know it, time to caffeinate and dominate. Welcome to Charts and Coffee. Great to see everybody. Looking forward to this week. We're going into a 3-day weekend, but it will definitely be a week where we will see likely the continuing end of month, end of quarter, really, rebalancing. We can see here on the daily time frame that we don't ever want to fade Fridays. I talked about this a bit last week. We don't want to fade Fridays. And the reason for that is people go home on a Friday. They see the equity markets were up. When they see the equity markets were up, they think, oh, I'm going to miss something. Maybe this is the bottom. And the FOMO kicks in. And then what happens? Well, either Friday night, Sunday night, Monday morning, they want to join the party. Doesn't mean we're going to continue higher in the same way that Friday did, but there will be that little bit of lingering buying. So what we want to do to use that is say, all right, where are we now on the XLK, XLC, XLY, XLF? I'm trying to think what other sectors are on the radar. Those are 4 of them. NASDAQ, S&P. Where are we? Where have we corrected to? And when I look at my planner, and I actually have 3 planners. I know that sounds bonkers, but I actually have 3 planners. This is my main one for trading. I look at Tuesday, Wednesday, Thursday. I've got 3 more days, and these are the most intense days as we go into the end of the quarter, the end of the month. And if we're going to see some more buying, if we're going to see a little bit more rebalancing buying, more flows in. By the way, my Sector Secrets Mastery, folks, I'm going to show you how to measure those flows, what I'm looking at and why. But keep in mind, gang, money is attention. And if this is where the money is flowing in, you want to keep an eye on the overall structure of the market, but not try to challenge, well, this is where it should be exhausting. We wait for our patterns, we wait for our setups, and we just wait for the opportunity to take the trades that we've been waiting for, which is a correction of this downtrend in treasuries, downtrend in the indices and many of the sectors, and then, of course, the stocks that are weighted within them. All right, so that is where we are. Of course, this show is about your questions. If you haven't already, by the way, checked out the economic calendar, it's not a super quiet one. We do have some sort of medium heat hot zones by way of core durable goods. And you see here, give me one sec here. Just having some audio issues. I think we're good. Yeah, I think we're good. All right. So now that we know our broadcast is working, what we need to do on Sunday, Monday morning, just take a look at the economic calendar. There are 3 of them. This is the main one that I look at. Core durable goods, pending home sales. Durable goods are behind us. What kind of mood is the market in after that? And then remember, 10 a.m. pending home sales. And not a quiet week. Wednesday is going to be probably the big day this week. It'll be within that 3-day countdown to those flows we see end of quarter. Lagarde, Bailey, Powell, 3 big poobahs, the poobahs of those central banks, European Central Bank, Bank of England, and the Federal Reserve. So a lot going on by the time we get to Wednesday. All right, so let's go ahead and jump into the questions. And let me get these charts a little bit out of the way. There we go. Kicking it off with, all right, let's see. All right, Brian, how are you? What should we layer on a double green or red to indicate an entry? Well, Brian, check out the slides, and we want to layer on one of our confirmation indicators. That's exactly what we want to do. We want to layer on one of our confirmation indicators. If it's a trend, we focus on certain indicators. If it's a chop, we focus on others. So when you go through the slides and when we go into live trading, you'll see that process again. Now, double green and double red, you really don't need to layer on something else because the structure itself is usually enough. And oftentimes you'll see two of our indicators. It could be, I talked about what to do with the grab candles in the class. I talked about what we could do with the wave along with the HPMR. So I would layer it that way. All right, next up. Are we in a position to short the rip yet in the S&P? See, Dan, I would say when we look at the chart, price-wise, the zone, yes. Timing-wise could be tricky, and here's why. It would be tricky enough if all we had was the end of the quarter. That would be challenging enough, as we know there could be flows going in at the end of the quarter, rebalancing. But then on Wednesday, we've got that triple central bank, I don't know what you want to call that, central bank palooza going on. If any of those bankers, especially Powell and Lagarde, if either one of those two sound a little bit more accommodative, equities could really like that. What we want to remember is price, of course, is very important, but there's always the influence from central banks that will absolutely, in a game of rock, paper, scissors, central banks beat everything. Everything. If we want to be sure that our timing is best, meaning favoring controlling risk over favoring just getting in, then we wait for Wednesday. So I'm going to definitely be waiting for Wednesday, and that's my plan. All right, next up is, let's get to our next question here. Mike asks, if the multi is N, I'm not sure what that means. The multi is N, neutral for S&P, but double red for the SPY. No, I will, Mark, personally, and this is for everybody, I don't want everyone to feel that they have to be futures traders or Forex traders for that matter. But think about this. Futures and even Forex, even more so, are larger markets. They're far larger than stonks. Stock markets are great to trade. Love trading them. Stocks comprise the indices that we trade. But futures are, and Forex even more so, are larger markets. They're also better in terms of reflecting the broader opinions that we're dealing with. In other words, they're more global. They're not closed. Look how long stocks have to nap every day. They're asleep 4 to the next morning, 9:30. Not futures and not Forex. If I have a futures contract that has an ETF alternative, S&P SPY, S&P SPX, I'm going to watch that S&P. Many of you that are going to be day trading with me Friday, and it is absolutely not too late to sign up and join me. You've got the next 4 or 5 days, Monday, Tuesday, Wednesday, Thursday, to review the class, which I would even recommend everybody do. And then we'll start live trading with our brand new updated HPMRs that will go out Thursday evening, is my estimate. What you'll notice is when we set up the S&P, I'm going to say things like, now it's time to choose your own adventure. Micro, options on the S&P futures, SPY, SPX. 4 different ways that have nothing to do with the S&P futures ES contract itself, that based on cost, based on risk, based on just comfort, you can choose to take another route into that trade. And I'm a big believer of that. Gold is the same way. Crude oil is the same way. Dow, NASDAQ, Russell is the same way. So no, I will not. Consequently, SPY is what? It's a very limited view. So we want to keep in mind, ES really is the more important touchstone for that trade. So great question, and thanks for asking. All right, next up is most indices and sectors are neutral and oversold on the weekly. Time for a shopping spree. Jan, yes, it is time. It has been for about a week or two. So great eyes. And time horizon 6 months. Time frame is weekly. We'll touch on those for sure. And I know a lot of folks don't know. So in the Sector Secrets Mastery, we're increasingly doing more day trading because that's what I'm doing. We, of course, have our swing trades that we look at on the daily, but longer term, macroeconomic, weekly time frames, 6-month time horizons, our portfolio considerations, those are right now just buzzing. We're going to be talking about that as we do every Tuesday at 3 in the Sector Secrets Mastery Room about our macro market deep dive in weekly time frames. So tomorrow, we will definitely start to dive into that, and I'll talk about using those longer term time frames, using the trend, using propulsion, and using, we're going to dive into something that a lot of folks don't talk about, which is what's the timing that we want to at least give ourselves a general, it's not a setup, right? There's a lot of things out there that give us a general idea of what's happening in the market. The, say, put call ratio is a great one to talk about market internals. I was asked about market internals yesterday during the weekly show, the Sunday show. I said I don't use them because they're not great at timing at all. But it's valuable to know this is the environment that we're in. Same thing goes for what I'm going to explain tomorrow, which is the timeline from the first to expectedly the last rate hike in this cycle, in this tightening cycle from the Federal Reserve. And along which part of that do we start to get the timing environment right, where we could sync up the price patterns, where it's time to say, all right, now we can start thinking about the bulk of the concern about rate hikes being in the rearview mirror. And there's a slow shift. It's not instant, but there's a slow shift that starts to happen. And if we can catch that shift macroeconomically and then sync it up with price, we're in a good spot. So we're closing in on that. We'll talk a lot more about that tomorrow at 3 o'clock Eastern in the macro, with our macro market deep dive in the Sector Secrets Mastery. As far as the replay, Dave, if you missed the class on Saturday, just log in to the website and look under my classes, and you can check out, I believe the replay is posted. I'll double check. But yeah, once you buy a class, it's yours to watch as many times as you like, whether you caught it live or you're going to catch it again, replay, or you want to rewatch it. It should be associated with your username if you bought the class. Sam asks, Germany wants a temporary suspension of G7 climate restrictions on oil subsidies. Is this positive for oil? I don't know. Germany has no nuclear power plants. Russia just cut off their natty gas. They're in a bind. I want to say they're opening up their coal plants. Not a brilliant strategy, but that's where they are. Does Germany getting a suspension of climate restriction? I don't know. Is it positive for oil? I don't know. I haven't heard much about it being discussed. Sam, part of any influence headlines or this kind of sort of political speculation would have is, how is crude oil moving? Let's take a look. I don't really know, to be quite frank. And it's okay to say I don't know. Crude's in chop. We're not actually, this is kind of going back to the earlier question about timing. Germany's timing on this is not syncing in with my timing on the price chart. That was closer to just below 105, 104. That's useful. Or the minor low being taken out, which, by the way, doesn't happen till about 109.5 to 110. That might be a little bit more useful, but I'm not seeing a surge. I'm not seeing that discussed. I mean, I'll keep an eye on it, but what I'm keeping an eye on right now is that oversold zone, our slow stochastic, neutral environment, minor low. And if we buy in the zone down in here, that's already come and gone. Only 2 wicks even entered that zone. Now it's, can we get above 109.5, 110? And that could be part of the narrative that powers it. Sam? I mean, I'm looking bullishly anyways. So that's the way I would sync that up. Hey there, Randy. Oh, I appreciate that. I really enjoyed doing that class. It's the evolution of the day trading classes that we've done. And a lot of you realize, wow, Rog, it's kind of the combination of you're always rooted in the same foundation. We're always building trades on a similar philosophy. And that's what good traders do. They don't abandon their philosophy because they found some new secret squiggle and then reinvent their trading. That's just not how it works. However, we can continue to evolve, add, find nuances. And that's what I hope a lot of you saw, where some of it was very familiar and comfortable, like an old shoe. You just know it's gonna do what you need. It's comfortable. You can walk a long time in it. But then we did some upgrades. It's like, oh, this is where there are some nuances. Most of it's time and volatility, right? I appreciate that, Randy. Thank you very much. All right, next up, what is the reason for such a wide bid ask on the NAS? Rick, anytime we are, and I love your given name, Rick. I know you use Rick, but I love your given name. It's a great name. I know you're using the shortened version of it, but Rick, so remember that depending on the time of day, this is a big part of what we were discussing going into the class. Depending on time of day, you have a different level of participation. So if we have a lower participation, lower attention, it's pretty natural to see the bid-ask spread widen. And once the bell rings in about 13 minutes here, we'll see that starts to tighten up. It should already have tightened up. Time of day will usually make a big impact on that. Next up, Mike, what do I think about the 6A setting up for a short in the next 10 or 20 minutes? Well, intraday conversation, like it. You got your line in the sand, hopefully drawn in, okay, which we are below. So that's pointing to a potential short. Neutral market, preceding the neutral was red, like that. HPMR. Remember that 6A will be somewhat sympathetic. It will move in some way in terms of risk appetite, risk aversion to the opening in the equity market. So you are heading into a higher volatility environment for 6A. That said, if you can control risk and define what your risk is using that HPMR fade, overbought, it looks pretty darn good. The only thing that I would have to say is going to be a bit of a challenge, Mike. The only thing really is the timing. We have to be aware that if the equity markets rally or if the dollar sinks, we're going to see 6A continue to move higher. So keep an eye on that. But that is something that I do like that. Good eye. I mean, that's how fantastic, Mike. That's how really easy it could be when we look at the structure of the price action and the zones that are lit up, but then remembering that time is a big part of that. And I think time, a lot of day traders just don't look at time and realize that different times do present different volatility, and risk targets, zones are going to change sometimes dramatically from hour to hour. So good stuff. Good stuff. All right. Gang, that's pretty much my time there. So I'm going to see you all tomorrow, same time, same station for Charts and Coffee. I will see you all. I'm going to be in a bunch of rooms tomorrow. We'll see you in the futures room tomorrow. And of course, remember, we've got our Sector Secrets Mastery macro market deep dive tomorrow. And yeah, I'm going to see you all in a lot of the rooms. Got 2 sessions in the options room. So if you have questions for me about some of the day trades or macro, feel free to ask then. But in the meanwhile, gang, be good to each other. I will talk with you soon. Same time, same station. Take care.